Friends, and welcome to the Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Welcome. I hope you guys had a great weekend this weekend, and you're ready to take on the markets. Don't forget, it's still summer. The markets are quite volatile right now. There's not a lot of skin in the game, so even though you see this, it has been climbing up all summer. Summer's typically not the best time to be trading. So kind of keep that in mind. Keep your leverage low and your entries tight, your stop losses tight. So be very specific. That's what we're here for, to look at price action and study price action in such a way to keep you safe, or to keep your trades safer. All right, let's see what we got for our friends here. It's just me in here right now. That's okay. All right. I just want to say I'm just making sure everything's clear here. Let's get on. So here's our 8:30 open. This is our hoodies 8:30, and we're going to try it and follow through what we did last time. I just want to say thank you to Gary and Linda. My cool new shirt. I don't know if you guys can see this. I'd rather be trading. The bull and the bear. I like it. Bull and the bear. Bull and the bear. Thank you very much, Gary and Linda, for that. It's a nice little surprise birthday present. I love it. Thank you. Thank you. All right, now let's go to our, what am I looking for over here? Oh, yeah. Let's go with, yeah, it's a shame Ozzy's gone now, hey? Osborne did a concert like 3 weeks before his, oops, typing in Ozzy there. Keep your eye on that one. All right, so this is my first little box I'm aiming for here. So it's this morning so far, and then 1 minute chart. Let's have a look at the 5-minute chart. Let's see what we get ourselves all lined up here. Get a little bit of a late start this morning. Morning, Hadi. Right. 4 hours. So we have this new day opening gap. Or new week opening gap right here. And I will put that on. So I've got something, a reference you guys can see on the charts. New day, new week open caps. That's a week open cap there. New days. All right. So we're into the consequent encroachment of that, and we've backed out of that. So I'd like to see if we can get back up into 537. See if we can roll over here, or at least get into 531. There's the tap of the box. Anonymous, good morning, good morning. So we're just working this new week opening gap, consequent encroachment, and upside premium box. If we close below this opening of the new week opening gap, we may see another drive up into that 534, 537 level, or 530 to 537 level, and see if that level holds. So we're looking for two there. That's the higher time frame, 1 hour. This is the lower time frame I'm looking for. This higher time frame, 1 hour box. I'm looking for it to stay inside. And see if we can't get a rollover. If we're looking for a D's 830, it's a down close candle. So we're expecting this to run down today into here. So now they've got to run up. This would be a good place to run up into for 9:30, 10 o'clock, and then roll over and come back down, making a 9, 10 turn here into a run into this new week opening cap down here, which is potentially another 100 handles or so. Price took the high, the old high. Yeah. So this looks like it's taken an old high. So I'd like to see that just come back into here, roll over and come back down and lower again. So if we're using 830 as our launch point for that, a couple little confluences I'd like to see for that to continue in the direction we're looking for. So a 5 minute. Let's see if we can't get below this 5 minute box here. So it'd be kind of nice to see it drop down below that, come back into that level, and then continue going lower and take these lows. It's kind of good if this just suddenly rips down here. It doesn't even take that. When we get back into this gap, if we trade through the gap, come back to the gap, use the gap as leverage to go lower, that would be awesome as well. And then I'm just looking for a return to 442, 426, somewhere around there. Good morning, Craig. So let's have a look at let's stretch this out a bit. Let's look at some of the other markets. Looks like this is on its way back up. We get through this level here, look for this box. Look for that box right there. Okay. You get a rollover consolidation. So now this 5-minute one, we come back to the consolidation, a CAM model 1 entry, and 50% of that fair value gap, consequent encroachment with this, and then tap it and go higher. That's interesting to see. I want to see that. Joe Matt, good morning. You're out of your long for crude, are you? It's not an inversion fair value gap. So again, if we use that to come lower, I'm looking for it to get through this box here. Inside this large range, you'd have to get through 44.946 to start reaching for these lows again. Natural gas looks like it's got a little bit more lift. We can get through last 15-minute high. We look for these highs above us here. HNC. Good dividend payer, that one. This is the volume cube. I don't need this one. Oh, this is the German DAX. Okay. Look at that. Right to rejection block. Did not take the high. Turned and came back against you. I don't know how many times I can tell people, pay yourself at rejection blocks. It's the best time to be absolutely sure it's going to run to that. You think it's definitely going to take those highs now. High resistance right there. There's your example of high resistance. High resistance. And that literally, right to rejection, did not give you the high rolled over. Now we have a lower resistance if it comes back and retests this. So you don't want to see it close below this level. It's already popped through there twice. So we may be running for the lows here. Look for mean threshold below you for DAX on the hourly. If we can get a reversal here, make sure you stay above the breaker. Yeah, that you want to see this wick hour turn into a wick again and stay above here and start reaching back into this range here. Get above here and you start looking for a potential run on those highs. Oh, you're out of crude, are you, Craig? Nice little retest at this level here, though, hey? Look at that. I like it. That's hourly. Let's go to 5. Body trades above it. Come back inside the breaker. Look at that body. It's totally respected. Bullish candle. Add the two together. Stop loss go below the low. Keep running. Takes the premium level on a close. You come back inside the premium level. Holds it. Finally break through here. Come back into it. What's going on? Oh, there's a tiny little gap right there. Right there and there. Body trades above them. Wait for it to get above your premium level. Comes back into it. Goes higher. Reverse. Comes back into it. Goes lower. Takes this side. Low. That little box we're looking for. Hits it here. Then finally pops through. Takes the lows. Body trades above it. Comes back into it. Runs higher. Takes the premium. Takes the high. You want to see if it comes back through there on a close. It does. Then closes back through that on a high. So you get back in sync. Goes higher. Oof, nice little run. So where are you looking for this to go, Craig? $59, 77, 67, 59. So the top of this fair value gap here. That's a gap, actually. So you're looking for a run up into the top of that. Consequent encroachment's right here. Your high is 67.60. You carried it over the weekend. That's brave. That one is gold. I want to see if gold can get above here and start running back into this range. We've got this market maker sell model. Now I want to see this reverse, take a consolidation, start turning into a buy model again. Trade back into this order block here, taking out the lows. Trade back into that. I want to see this low get taken out now and keep going lower. Otherwise, this candle here needs to go 119, 119. Got some more upside for the banks. Disney. I want to see that roll over now, Craig, and come back down and take these lows up here. Start digging back into this breaker and this inversion here. I like to see that just coming down, creating another price leg lower. We can get back into serious lean hogs. We're back on the run again. That's good. And now I want to see that continue to push into our premium box here. So I hope that's going well for your abs and you're still in that, doing well. We did not lose our main threshold of our breaker, which is great. And so far we still have upside for the little biggies. Give this a little tap right here, British pound. I want to see that keep running higher now. You want to see it take these highs. Get back into this breaker here now. So between that breaker and this high here, give it a tap, drill through the breaker's mean threshold, and it's hit it already. So I want to see that get taken and start running higher. So what is the US dollar up to? They're right back into that premium box. So if I hit that roll over now, start coming lower, take out these lows, we're back into this little tiny guy here too, right? Here in between this one and this one. So box to box. You want to see that box hold, roll over, take this one out, use it for leverage to continue pushing lower, extend the range, and get down to this little guy down. 96.60. So good. Oh, look at that. Hit it. Didn't quite come back and give it to us on the 1 minute for a continuation on the downside. So our little Hadid setup right here, hit it nicely, ran through it, but you like to see it come back and give it a little tap lower. So what you can add to that is if you see this little this inversion here, so if you get that, there's a little tiny gap right here, and you mark this up. So much like the right there, so much like the candle I tell you about. So if we get one candle that blasts through the level we were looking for, right, and it comes to the next level, use the next level candle. Don't worry about the one behind it. Use the last array that it triggers off of, and if it runs through the next one, trigger the last one. Same kind of thing with Hadid's setup, I would imagine. If you get one candle that continues to run through and does not come back to it, but runs through the next PD array, use that PD array to continue going lower. This is all hindsight, obviously. I'm just trying to form fit what I can see using it. So my principles with something like this, where you don't get an opportunity to come back and grab that, unless you're on a lower time frame. So if we go to a 16-second chart, you say, or 15-second chart, and you say, I want to look for that opportunity here. There's that 30-second. You still don't get it on the 15-second chart. You do get this one here, body trades below it, actually gaps up to this open low, tap it, and keep coming lower. There's the discount array right here. If we get through that, we literally closed, opened below it, came back inside it, rolled over, and kept coming lower. So you'd have to be down on the 15-second chart to catch that heady entry. Unless you got another way of looking at that. I left a lot on the table on crude. Yeah, it's okay. You made some money, Craig. That's all that matters. I went 15 Disney to buy. Hi, Darren. How's your back doing? It's a lot better right now. Thanks, Joe. Just started to go to the gym last week, going really slow. Empty bars, that kind of stuff, just range of motion stuff. But yeah, I'm doing better now. Thank you. Getting some mobility. It's good. 463. And constant quick to me hourly wick. Pablo, good morning. How you doing, Pablo? We're not done up here, I don't think. If we come back down into the bottom of the gap, let's see if we come up to 503. Or if we still come back and use this. I guess you have to incorporate, if you're going to do this whole thing as a, because you have to include the fair value gap along with the new week opening gap as well. So if we use that, we'll come back inside the whole thing here. We may bounce around in here for a few hours or 4 hours at a time. Let's look at the 1 hour chart. Right, lovely, right back inside here to the top of the fair value gap or the new week opening gap. I'm looking for a continuation down here to 447. Work on your glutes. Very important when over 60. Lunges, really good for your glutes. Morning, abs. Let's hope everything's going well. It is. We looked at your lean piggies today. Your piggies look good. Let them run. Let them feed. You got a little. You got good pig action today. Abs so far. Waiting for 9:30. Hey. Oh, I missed it. Let me show you little piggies. Where is the little pigs? Is it? Nope. Hogs. Little piggies are doing well. We came back into that breaker. See, we are opened above it. Came back, tapped it. Good. Came back, tapped it again. That's fine. Came back inside the wick. And then pushed higher. So that's what we're looking. We do want to see the mean threshold get taken. And we're looking for this next run higher. I'd like to see us get back up into here. At least start looking for this 50% of this wick here as well. And we still have this BISI to contend with. And there's a small little imbalance over here as well. So keep these in mind when we're looking. We got a few more dollars to go. Get another $2 out of that. Maybe a nice little stretch. hit that low there. So I would like to see that come down a little lower. We can break through that little imbalance down here. I do like these little tiny imbalances as well. See if we can get through that, come back to it, and come lower. Yes, indeed it is. That's the breaker at 455. It's a 444. Did you guys have a good weekend this weekend? You can taste the soap. My wife washes my coffee cup because it gets kind of grimy, but I think it adds the flavor. But all I can taste is that dishwashing liquid. Yuck. Kind of ruins the flavor of a fine coffee in the morning. Not that I don't appreciate her washing the coffee cup at all. So we hit that little box right here. Now you want to see it, tap this and keep going higher if you're one of those people that are so inclined, or continuation on the downside. We want to see that close below that now on 3 seconds. Come back and go lower. Literally opened, closed on it, opened on it. Look at that. Open, close. Now you want to see this low get taken. Rejection block. Pay yourself a portion of rejection block. See if we can't get a 479. So the new week opening gap is first target. I do like this. If the gap stays open, a small portion of that stays open and then starts to go back higher, watch for the 456. So if we lose this candle's mean threshold, I would expect to see this high get taken and us move back into this range, reaching for this up here. There's the mean threshold right there. So between this mean threshold and this one now, immediate rebalance. Let's see if this holds right there. If we get back through this level, see, we haven't had a body really get through here yet. They just open and close in the same spot. Back inside this one and this one. Now you don't want to see it get back through the midpoint of this or this little premium box here is a wick. Let's see if we can just see that roll over now. Keep coming lower. Write these numbers down. Right, numbers. Let's see what we get from here. below it into this premium or into this old discount box, new discount box, break through, hit this one. Now we're hitting this one. I want to see it continue coming lower now. Regular trading hour gap below us. 435. Let's see if we can get a nice kick off of here now. This ran right through our level, right up to this premium box here, or this old discount box that was never tapped. And now watch it run. It's gonna run. So now we're above this level here. I'm stuck between here and here. Traded above it. Ran back to this discount that we didn't get an opportunity to get hit on. This one worked. This one was left. So we didn't get a chance to tap it. Now they've tapped it. 9:30. Sloppy now. Still expecting it to come lower. What do we add here? Is this 75% of this? God, it is too. Look at that. Right on 25%. So that's a 75% fill of that. That reverses now, goes higher. Right off of 25%. Wait till 10 o'clock now. Wait for 10. Get this guy here. Bodies are still respecting this one. Above here. You see this hold now come higher. See if we can't get through this level and then we'll start eating through these little guys here. We have a change in direction, market structure shift, trade above it again, came back to it here, looking for continuation. Just wait, see if we can get above here now. Just kind of watching to see kind of reaction get off this breaker and this inversion. Starting to climb our way above here now. We're through this mean threshold. We've dug into it once. Freeze right up on the mean. So above this level now, I want to see this provide support to keep pushing higher now. It's wick time. Watch the bodies. Now we'll see if we can push through this level and then we're right up into here. And keep in mind you're already in the premium portion of this leg here. Oops. %70 option trade into reversal. We get back through here again on a close. Then I'm back inside this range. And then this guy becomes important for me to range extend. There's too much wick going on here right now. So I'll wait for something cleaner to set up. Good work, Joe. Take the run. Walk away. Good morning there, Derek. Way to go, Joe Mac. Well done, man. We're below that level now. Back into that level now. Back inside this range. We'll see if we get through here now. Right up, back up to the high of the new week opening gap. And now run back down into that discount, that last 25% of the gap. See if we get through here now. And that last little fella down there. Back into this mitigation block. Did not take out that low. This breaker. Watch its mean threshold give way. And then look for a run down lower. So now we've reversed. Body changes direction. Coming. So you got to be prepared to watch these changes in direction. Optimum trade entry reversal 70%. So you look for the first opportunity to see a change in direction, state of delivery. Another change in the state of delivery. Come back into the inversion. Push down, like we said, deeper into this range now, looking for this discount again. It hit that, ran through that. Now I want to see if we hold a body through here now. So we take a body out through here. We're looking for continuation on the run for the lows. And then a potential fill of this new week opening gap here. No body there, just wicks doing some damage. Remember, we want to see bodies get through here, not wicks. So we're looking at this level here and this level here, so use them together in conjunction with this fellow here. We've already traded above them. No bodies got through the wicks. No bodies got through the candles, but lots of wicks. Lots of damaging wicks here. So I'm looking for this level. Also this level here. So close above, come back, and get your next price leg higher. This is just trying to stay on the horse here now. And these wicks are really gonna, if you're keeping your stop, like we're used to things working nice and tight, these wicks are gonna clean you out. So until you get smoother price action or cleaner air, this is like being in an F1 race behind somebody with lots of dirty air. You're getting bashed around here. These wicks, if you're keeping your wicks at strategic levels, this wicking through thing is gonna destroy your stop losses and your fail safes. So wait for cleaner air. That's simply all I can tell you about that. So there's the premium inside box to box trading inside the small range. You go from box all the way back up to this little box here. You can use that whole level. So you want to see 498 on the close get taken. Keep finding these little covers for my paintbrushes. Plastic tubes to cover your paintbrushes. I'm all over the place. There's the top of the premium box. So I want to see this 498 on a close. 499. Let's say 499 on a close. Then come back in and use this as support to push higher. So look where oil's still going. Did it get to our 67.59? Nope. 67.06. I want to see that go up a little higher and clear out this breaker here. And then use that breaker for support to go higher at 66.55 all the way to 66.41. I wouldn't want to see it, this fair value gap get taken on the downside. I want to see that stay open. So come back inside all the way to here, here, and then, yeah, I guess you could, it'd be nice to see that continue away as a gap to continue pushing up prices higher. But all the way down into this breaker here, takes out that little high. I want to see that 66.48. We're allowed to get down to 66.41. So I'm going to put a little line in here. That's the line in the sand. You don't want to see it go below. Looking for mean threshold of this candle, or the consequent encroachment of the mean of this wick in gold, and see if that low gets taken one more time. It's hit right on the box. We traded below this level, take out that high, traded below it, came back up inside it. Looking for continuation down here. Traded below this level, came back inside that level. Little discount box, ran through it, came back to it, tap it. You want to see it keep coming lower. Breaker to the breaker, breaker. Inside the breaker is in the gap. So it still looks like it wants to go lower, and I'd be looking for somewhere around here. I'm just going to move this one up in here. See if we can't reach for that. We can get through that, then you're looking for, you can almost extend it down into this guy here too. Kevin, speaking of chaps, the press is taking in Scotland right now. Is talking to Scotland. He's totally not wanted over there. I saw this sandwich board that said fish guts to throw at Trump. Free fish guts from the fish and chip shop. It's like, woo. Not happy. So we take this here. And put that in quarters. Keep an eye on those levels. How's our marks coming down the way through the breaker? Right through it. Main threshold, we're looking for it. We sit down here. I'm guessing, I'm just eyeballing this one here. Yep, right on the money. We'll see if we react off that level. Dow Jones has hit the level we're looking for down here. ES. What did we put in ES? Want to see it get above that? It did, and then rolled through it here on a 15-minute. Watch for lows, market structure shift. Body trades below the low. We come back in, we tap the low. Look at these lows to get taken. Body trades through them, come back inside them. Wait for the low to get taken. Trade back inside it, and this gap. Go lower. Yeah, there's nothing you can do right now. So I'm going to watch this run down into this discount box here. Wow, that must have been a heady entry causing that explosion down. Let's look at these 830 here. See if it would have worked in ES. There's 830 right there. Nope. On a 1 minute anyway. See how it trades through it? You go, great. Now come back, give it. I want to see that go lower. So if it continues to gap down, look for the next objective. It's the mean threshold traded through. Right here, see how the mean threshold, it stops on it, opens on it, comes back up, takes out the low. Want to see a body trade through it? Look at that, it stops on it, closes on it, finally opens up below it here, comes back, gives it a tap, and then you can go. So they're on a 1 minute from the 830 open. There's your first entry there. That makes sense off of the next PD array, and then you get to slowly ground your way down here. Not clean, of course, but that's the entry right there off that little guy. If you're looking at very precise levels that you want to see it trade off of. See, ES is going into, it's filled in the new week opening gap and going lower, and this one just refuses to roll over and come down, so it's stuck at that 25% and super choppy. So that's where you're going to get beat up. We trade through that level, close back through it, and it's terrible price action. Back to the premium high, premium box. We've got lots of wicks in there already, or 2 wicks in there. ES seems to be way cleaner to trade right now. Nah, it's not that clean. See how we trade below it here? Here, pop. Did it come back into that? No, just shy of it. Inside this fair value gap. trade all the way back inside it, roll over and come back lower. So I'm aiming for this box down here now. Body and opens and closes on that level. Data point, you figure? Rejection block again. High still not. I don't. Where do you have the high is taken again? I don't have this high taken yet. It's rejection block again. Denied rollover. Look at that body sit right on that level of the premium box. You didn't get a body above it, so we didn't take the highs. No wick ran the highs. Now this is low resistance now. That was high resistance, low resistance. So if we do get another long wick stuff down into here, and then start to reverse again, look for that high to get taken there. On MNQ it did. Okay, so you went for your micro one. So did it pop by it with a sense of urgency? Did it rip through there, Hadi, or you just got a small wick above that high? Small imbalance right here. Don't like it either. Too sloppy for me. Too sloppy. There you go. There's our DAX hit our objective. Now I want to see if DAX does. See, DAX is so much cleaner, eh? Look at that. This discount box, premium box. So it's gone from premium to discount. Perfect. Right there. See that little imbalance? Hit it. Hit it. Trade through it. Right here. Come back inside it. Body's respecting it. Push higher. Reverse. Change in direction. Change in the state of delivery and market structure shift. Low. Taken. Come back inside the order block. Continuation. Breaker. We trade through the mean threshold. Oops. Trade through the mean threshold. Come back inside. Take the low. Change in direction. Body trades above it, come back down, take the high, wick through the high, no body above this. It's a bull trap, rolls over, takes this level on the downside, right there, comes back up inside it, continues to go lower, takes the lows, so we trade through this level, right straight through it, and take the low at the same time. So now you're looking for a return back through this level, which you get right here, comes back, tags it, and then continues to go higher. This is way cleaner price action than that crap. That's just a lot of damaging wicks, man. Like, look at that. Before 10 o'clock and after 10 o'clock. And there's a lot more stability in the German DAX. Now I want to see how we've closed right on that mean threshold and we've opened right on the mean threshold. Is it a data point? You guys need to mark them on your charts. It is a data point. It will freeze on it, hold it, go through it, tap it, come back. It's a reference point. Michael's talked about these things many times. Right in the early stages of your trading with Michael, he'll talk about the key levels, the open here, the close, the mean threshold, and then later on he'll start talking about the wick and how the wick can be broken into 4 levels. Its mean threshold being most crucial, right? A slight disconnect between the two. One's going lower. It has filled in that fair value gap though. I want to see it halt right off here now. I want to see that continue pushing higher. This wick, I don't like the fact that we ate through the mean threshold of that with one wick on the hourly. So retest mean threshold. Let's go here. Let's just see this for a second. Yeah, that lines up. 435. This candle's open. Look for low, open, and then the mean threshold of that candle. Let's see if that rolls over and comes back lower. We've got a body that's traded below that. So if we just tap this right here, roll over and come back lower, I'm okay with that too. Leave that open. SQQQ, haven't seen you in a while. For message retracted. NQ. How's our banks doing this morning? How's the little piggies? I'm looking right here now, abs. I don't want to see this wick, so I'm going to draw these lines in here. This is where I want to see that freeze up for you. Halfway through that wick, you don't see that wick's consequent encroachment get taken either. So I like that open consequent encroachment. We can tap that and start moving higher. Remember where you are inside the range. If you're using your fib tool, remember we talked about this before, about how you're going to manage this on the trading side. You're above 50% now. So if you're entered in down here where we were talking about before, you pay yourself a portion at 50. and then move your stop loss to break even plus the cost of your trade, so you're automatically in profit, and it's a zero stress trade. If you can get up now, if it just bounces off that 50 level, which seems to line up nicely with our data point, strange, eh? That area we're looking for, consequent encroachment, open, or sorry, the close of this last up close candle, and 50%, there's confluences there that tells you that'd be a nice place for support, and then continue pushing higher. So if you get to 62%, move your stop loss to 50, take a portion off here, pay yourself, and see if we can't get up into this 70% optimum trade entry reversal zone. And if you hit that, we've hit the box, objective completed, pay yourself a portion there, move to 62, and see if you go to, that's just using that take profit model 1 method. But things to keep in mind when you're trading. I don't want to influence you too much. I just want you to realize that this candle's got you some support now with some wicks. You want to see it just keep pushing through that now, but make sure you got yourself protected in case it turns against you. You're welcome. Bitcoin's hit that level we're looking for, or discount box. Had a nice reaction off of that. Now let's see, it's just start climbing right up above here, above 118.782. If we use this breaker here, it takes out these little highs at support now to roll over and come lower. We've traded below this level, so I like to see us use this level and this breaker to be heavy and come down to the next level, which is right here. $118. See if we tap. How's our banks doing? Can you wait for market structure shift here? If I get a market structure shift, I'm out of the engine. And I don't have anything in here yet. It tells me there. But if I see a market structure shift here, I'm getting out of that. If we come back below that and come back into this order block, I'm going to close out of that one. Gold, what's gold up to? See, gold ran our lows. That's what we're looking for here. Reverse, change in direction, entry in here, any one of these entries here. I recognize I'm on the wrong side of that, get out. My stop loss sitting way down here, got out, and it did not go higher. Trade through that level, come back into it, take out the lows. Now I want to see how it acts here after taking out the lows there now. This is the next level. Oh no, that's it right there. Yeah, that's it. So come back inside this level, see if that holds now, rolls over and comes back lower. Oil. Still keeping our eye on that 67.59. We got above this little tiny imbalance here. Imbalance, trade below it. opened on it. Wow, that's crazy. First fair value gap, trade above it, come back inside it, keep going higher. What do we look for first fair value gaps over here? Body trades above it, comes back, gives it a perfect little tap there, goes higher. Let's look at this one as well. I don't have this on my Tristan. Look at that, how many times we work that. Boom, boom, boom. Went higher. You're looking for a new high of the day in short. Which one is that, Craig? Oil or Disney? How is Disney doing? We're looking for that to get back down here, right? Take these lows. Oh, it just swept the bodies, but did not take that low there. It did come down and take out the lows though. Cut to the breaker we were looking for. Wow. Back inside here. Keep coming lower. So we want to see that continue coming lower now, Craig. I want to see it get back into here. And you said you wanted to see it get back to 115. Yeah, after that you've got so once it takes this candle out here, we come back, use that as support to take out these lows, and then start running for these downside objectives here. That's what we're looking for. Get a nice little unicorn trade into this. That'd be nice. 117. See how we don't have a stop, sudden stop here, but we do have the bodies stopping here. A little wick down, with a little wick up. But I would like to have seen a wick back into this level here, like at 2463. Like to see that. Right between the sticks there, if we can come up into the sticks, roll over, take this low out, and you're looking for the rejection block, old low. These old lows down here. And then our dance continues. Objective 2 and objective 1. That's where I'm looking. Hans, if you guys are around, or Ali, I know you guys like to trade the DAX. If this mean threshold gives way here, before it comes back. I'd like to see that just wick around in here and see another wick come back into this level in between the sticks. Hit the sticks, I don't care, as long as it comes back to that area. Then look for a rollover to come lower. Look for confirmation of a lower time frame for a continuation on the downside. Pay yourself at the rejection block, 50% of the wick, and then aim for here. If that's your downside objectives. Okay, I'm cold enough now. We're back through it. Through it. 5 minute first fair value gap. Through it. If we come back and tap it. Line in the sand. Here's our line in the sand. We've traded above it. Come back to it on the hourly and keep going higher. So here's our line in the sand. So I've got no problem with the fact that it's come back down now. That's what we're looking for. 1 and 2. I want to see this piece stay open here. Yes, that's a nice little retracement. We've broken above that level on the high, come back, found support at it. Nice long. Are you in long on that, Midi? That's a nice little change in direction. Market structure shift right here. Nice displacement candle. Come back into that level, which is what we're looking for over here in oil. That same thing you just saw there, we're trying to look for that on this right here, that tap and go higher. It's what the same thing we're looking for right here. Tap and go higher. See that? Same thing we're looking for. If it's, oops, crap. Oh, we have X's in there. Where's my oil? So there isn't oil, so I have to make it. So the same kind of principle we're looking for there. Tap and go. So far we've tapped. Now I want to see it go. So you want to see now if you're getting on the lower time frames for continuation or confirmation, you want to see it get back above that first fair value gap. This one here, above that, find some support at this. Start running for the premium, take out the highs, meet threshold. Those are your upside objectives. Then you want to see a continuation. So that right there is the entry for long, which is the same as this right here. Tap, run, take the highs, pay yourself. Next premium array, all the way down into here. You don't want to see it get below that. We're just retapping this level, 1, 2. Keep coming higher. We can take a 1 on that. And I'd want to see a stop loss just below here. I don't want to see this get taken on the downside. Taking that high, not on the close yet. But I do like the fact that we've taken these premiums. Oh no, we did take the high. We want to see it still go higher here. That's a bear trap right now. or a bull trap. I just got caught in it. So in other words, if I lose this one on the downside and the mean threshold with a wick, then I'm going to be wrong. We're looking for a retracement back down to here again. So watch this level here, premium here, discount here. Just touch discount. It's the little boxes you want to look at. So know where your fail-safe is. And we're in a tight little small little range right here. I want to see this piece here get taken on the upside. So we're working it, tapping it, roll over, tap here, or push through, go higher. These over here, so it keeps my, and all this crap just blocking off my end. So we're banging off those two levels. So you want to see which one gives way to continue going higher or come back into mean threshold. Use that to go lower and come back below here. Then it's a market structure shift again to come back deeper into the range. We've got this back here we haven't tapped yet. I'm out. I don't even like the fact that we wicked through that. So I'll look for this down here now. Order block. I've tapped that there. See my fair value gap when my stop loss would have been taken. I mean my fail safe. As soon as the wick goes through, I'm on the wrong side. So now we're looking for this down here. And look how we hit it right there. So that's the discount. So if you're looking for this range and you want to be, you kept your stop loss down here. You've got a little pool of liquidity sitting right here. We have this little market structure shift, trade back into it. Right there. Mean threshold. And you also have this imbalance right here. These two imbalances. So you can come back up, tap that, roll over, and come back lower. If you get back through that, then we're back into sync, quick going higher. This was just a quick run back down to a 70% uptrend trade into reversal. So I can argue both sides of the direction. Right now I'm bearish. All the time we stay below here, I'm bearish. There's the tap. And I switch up, changing directions for bullishness if I get above here. And as you study price action, these precision points, look at that. The high, the consequent encroachment, the high, consequent encroachment. These are all like specific data points that the algorithm's are reaching for. This is not some random stuff. People keep thinking it's random, but they're not random. They are specific data points the algorithm reaches for when going from premium to discount. Choppy that is. So sloppy. What's DAX up to? DAX is just right at that mean threshold. Stop on it, open on it, come lower. About to hit the rejection block, which is 941. If you're short here, pay yourself. If you didn't already pay here, pay there. Because this is the time where it comes down to here, starts to eat into that wick, and then reverses and comes back up into here, and then finally comes lower. And this is that example I was trying to tell you guys about earlier, and I want you to see this again. So you put it on your charts, make notes of it, put it in your notes section. When you see these premium boxes forming inside a leg, we have a body trades below it. If we don't get it, then the very next candle's wick come back and tap it, and it continues to go lower, and then it takes out the next one. That's why I've shared this with you guys in the past, but keep this in mind. If it takes out the next one, which is right here, use the next one's entry point as a continuation. So right there is your entry, continuation. These stay open. And yes, they can come back and visit them, but you'll see that structure break, and then you'll see it come back into that level. So it can reach into here, here, or here. If we get a body through it, then it's heading back to that one. So where does your stop loss has to be? It has to be just above this one here. Rolls over, comes back lower. As soon as it takes out that low, pay yourself. Always take out the next previous candle's low and pay yourself and move to break even. That way you're in a stress-free trade right away. What's your next downside objective? Inside this range on the SIBI side, right here. Just ran right through it, took out our little sticks, closed the rejection block, and then headed for our main threshold. Stop. Just shy of hitting our rejection block right now. So these are the kind of things you want to see. When it's got acceleration like this, it's got a direction. It's heading for old lows. It's got another objective heading deeper. So as soon as you see those start to happen, look for the next one. Opportunity to get short. Go back through your charts and check it out. You'll see what I mean. We get back through here. Find support at that level, and then start to come back into that range. I'm looking at that gap again. Bitcoin hit our objective right down here. Nice. It's immediate rebalance right here. And we'll see if we can get through this on a close. And this is a mean threshold next. Take that out, and all these lows are next. Then I'll move from the next bar to up in my next goal. Disney hit their next objective down here. Took out that low. Right off that data point. And this is Disney, so tell me that these not an algorithm driving this, man. Specific data points. They are magical when you see them. When price is clean, you can't beat clean price action, I tell you. You can make a killing out of it. Just wait for, this is the kind of stuff you want to see, nice and clean. Not that. That's a shredder. That's a paper shredder. It's great practice if you want to stay on the horse. You'd be focused more on the bodies than the wicks. Because when the wicks do the damage here. It's so, look at how wicky that is. So you're looking for specific data points from the body. See how the body hits the low in that little gap still? We're still inside the gap. The bodies break the high. Body inside that little gap. I wouldn't be too concerned about the wicks, but that's not what you want to see. You don't want to participate in that. Yes. Off the first presentation for Maligat on the 1 minute. Watch these levels give way if you want to go higher. Precise point. There's nothing below you here. This mean threshold has been hit right there. Traded above it, came back inside it. Go higher. So now you're stuck between suddenly getting a little pop through here. You want to see it accelerate. Or if it eats through that mean threshold, then look for another retest of this. Come from below and then start running through here. If that holds, look for a sudden acceleration through this level. How's your channel doing now, Hadi? Are you getting lots of subscribers? You guys should check out Hadi's channel, the Bench Trader. Check him out. It gives you his setups and his trades for the day. So it's just banging around in here. I'd rather watch something that's got clean price action. It's good. It'll take you a while, Hadi. It'll take you a while once you get enough. There's no ads there. Yeah, he can't get up to ads till he's over 1,000, 1,500. I think you're going to get 1,000 people before you can start adding ads to his. So that's why he's got no ads. That's good, unless he chooses not to have ads in his thing, then that's fine too. Pay premium on YouTube, and you get no ads as well. Still waiting for something to happen there. Choppy there. I'm in the process of editing out all of my videos. I have like 242 videos, I think it is, from our trip. And some of them are like an hour long. Like the balloon ride was like almost an hour long. And it's all like an 8K video, so it's like super high data and requires a ton of disk space to edit it. And then to chop it up and do a bunch of stuff with it takes forever. So we bounced off this level, we've traded up to it. We didn't get through it, into it, tapping off of it. We're back down to that fair value gap. So if we trade through this, come into it, look for this level. So you're looking for discount premium levels, premium 1, premium 2. So there's our first discount level. We could actually bring this one up to there. I'm including this one here as well. So let's see if we get through those. See if 64.29 holds. $64.29.5. Mean threshold. It's compressing there. Let's hit our level there. Going higher. We wanted to see this stay open. So far it's staying open. Just came down and just gave it a tap there. We're just into the body of this candle. Let's close. I see that just start marching higher now. So if you're looking at crude here, Craig, you want to see this high get closed above and that little breaker there used as support. along with the fair value gap. Run for 66.84 to 66.85. See if you can get above that. You don't want to see 66.60 here. Get traded through. Again from below. So Bitcoin literally just swept these lows here. We've come back into that discount box, roll over and keep coming lower. I want to see it start pushing lower now. Now that you've tapped that, you can still come all the way up in and tap this candle here. Its mean threshold here, consequent encroachment of this wick. But I want to see that just start accelerating through here now. Come back down. A little tap there if it's definitely got intentions of going lower. I don't want to see even come back to that. Just keep coming lower now. Take out the rest of these lows. See if that's a downside objective that we reach in the next few hours. We're just shy of our level. I'm looking for the sticks above us here now. Indications it wants to go lower. Look at it. Bodies through it, taps it, goes lower. Around the high, no body breaks the high. Trades through here. Keeps coming. Look for retap of the low. Right here, if it keeps coming, look for this low. Those are the candles I was telling you about earlier. If they just keep going, look for the next objective to retap that. And if it's got some intentions of going lower, then look for the last one. So over here, you're looking for a retap of this area right here. So 66.57 all the way up to 66.58. We did not want to see this roll over here because I don't want to see us reattack this. But we, our mean threshold or line in the sand is right there. That's the line in the sand you can reach for. There's the premium box. Trades above it, comes back into it. Swept the low. Look for this here. Tap, tap twice. Box to box, internal range liquidity hunt. Market structure shift. Mean threshold. Start pushing higher. Top of the breaker. Takes out that low. Like this candle here. Main threshold. Keep pushing higher. There's nothing clean in there. US dollar's got us right back up into this level here. Balance here. I think the limit is 98.19. We're already above this level. We're already inside that premium. So I'm going to see if this closes above here at 98.19 on a close. And then look for, I guess this is your last up close, 98.26. Let's see if that turns into a wick now, comes back down. We got to get below this level to be bullish in all your other currencies. Let's just trade it below it, come back into this little breaker, and then rolling over now. So if this has got more upward pressure, they should roll over and come back down and take out these lows. You got to get back below 134.18 in the pound. And 16.30 on the euro. And 16.19. It's good. Keep coming. Close to our little line in the sand we are already. Like that bottom top. Or it's close to that, just shy of that mean threshold here. The macro is coming. See, we're bouncing around off of, as we start to compress, we're off of array to array, array to array, back to here. We're compressing. Something's got to break out of here. I'll be right back. See that ripped down to this discount box down here now. Let's see if we get down into that range. See it close below here, use that for support and start pushing for further downside. There's Dow Jones. Mean threshold. Well, it's not going anywhere right now. There's the rejection law. It's tapped. We'll see what the next 3 minutes does. See if we start to run back up into here, or if we start pushing. Get to the mean threshold here one more time. Tap it, roll over, and come lower. Disney driving through. Tap to roll low here. See how deep into this discount box we get in. So that's premium inside this range. Discount. Trade below premium. Back up into premium. Down to discount. See if we use that to leverage the taking them lows up there. We're looking for a forward to run up into this premium box. Same thing we just saw there in, is it just, yeah, see how we saw this here? Trade back into it. That's what we're looking for here. So we trade back into it, go lower. Same as here, trade back into it and go lower. British pound shows you that going lower. This is going to show you that, and you're going to see it come lower. And those are all different assets as well. How's Biggie's doing? Let's see those close up today on an upward trend. Coffee, sugar. Already in the premium and discount box of sugar already. So it's got to get above here. 1672 for more upside of sugar. Cocoa's got to get above where it's at right now on a close, 838. Right here. Let's see if that one holds right there. I'll put another stick in here. See if this holds, price it will roll over, go lower. Right off that low. Keep coming down. An hour closed, right on the rejection block. Now I want to see it come all the way back up into here. Like that's precision right there to there. Perfect entrance, perfect exit. Done. You could be done for the day in 1, 2, 3, 4, 5, 6, 6.5 hours or 6 hours. You've got a major run for the day and you're out. Oils through our level. Let's fill that in. The wick is right there, right on that mean threshold now. It's got to turn around and leave. You got another hour to go now. So the first 15 minutes, create the wick and then start seeing this push higher. So we're at 11 now. It's got to break this high here. See how we closed below it, opened on it, that mean threshold. If you're bullish now, you gotta wait for it to get above this level here. Now we've got this whole breaker. We shall see. You gotta learn how to hold, even if it eats a little into your profits. Well, that's, you got to look at the fail-safe there, abs. Once you get into your fail-safe and you know your fail-safe's at a risk-free place, then move into your risk-free zone. Right? If you see profits, you can't beat yourself up for taking profit. And if it takes off, hindsight's always 20/20. But your fail-safe is, it shouldn't be I have to hold longer. It's like I have to make sure my fail-safes hold. Because the mindset you're using is you're forcing yourself to go against your instincts, especially if your instincts are telling you that this is my fail-safe, for example, right? So if you say, this is my fail-safe right there. So if I lose that on a close, then I have to be committed to taking out the trade there and say, I'm done there before it takes my stop loss. And then you see it reverse and go higher. You say, fine, if it breaks this candle's high and the market structure shift, I'm going to use that candle's mean threshold as my new line in the sand. And if it breaks that, I'm out, because I have very specific parameters that I have to meet in order for the trade to come to me, right? You got to be very rigid in your principles, right? Flexible with the market, like Russell says, but you got to be very rigid with your setup. So as soon as it comes back into that, if it starts to break that on a close or a wick, you say, I'm out. Now, and I'm going to wait for now a new market structure break or this premium level to get taken first before I start to consider getting back into it. Then I use that order blocks mean threshold or this premium box as my support. If it goes below it, I'm wrong. It's just too choppy, because you've seen a level of precision with precise data points, right? And when those data points give up and it starts to get really wicky and the wicks run through your fail-safe, then you move to the sidelines and wait for something cleaner to set up, and just be that disciplined. Otherwise, you're forcing yourself with a statement like that. I listen to the statement you're saying right now is I have to hold even if it eats into my profits. Eek. Why? If it's eating into your profits, you'll say it's because I'm allowing it the certain level of failure, right? So I don't have too much problem with what you're saying, except for, does that coincide with your fail-safe? So we're above this level now. You want to see that hold price right there. Wick going through, don't like it. You're already through that level. Tap it, now reverse and come lower. If it pops through it, now see how it's going below it, above it, below it, above it. So then you wait for market structure shift. Otherwise, we're just bouncing around inside this fair value gap. Because I've got nothing inside the range for a premium and discount. I'm just bouncing around inside here. If that's the premium and that's the discount, you're literally going premium, discount inside that fair value gap. So wait, don't keep getting beat up in here saying that's my fair value gap I want to get above. Wait for a structure. shift because it's just changing directions over and over and over again inside that range. Yeah, that's smart, Craig. 11 to 1 is lunch hour, so it can be very choppy in that time period. So low resistance liquidity runs, low hanging fruit. We're in the sticks now. Now you want to see if that holds inside the sticks. Disney's reaching into our downside objective. So we're inside this larger range from the premium. We're now in the discount box. We want to see if we get range extension through the discount box now. I guess what I mean is since we trading the 1 minute, any retracement could eat up profit, then continue the direction. Okay, so I like that. So think about that, Abs. Think about that. If you're in a 1 minute, and this is important to understand, when you're saying it could eat or retrace and eat up our profits, right? When you say that, and we're down in a 1 minute chart, for example, if you're trading on a higher time frame chart and you see it reverse on a 1 minute chart, that could be the reversal that's occurring for the setup in the higher time frame, and you see it early. So when you see if profits are starting to get eaten up and you see this change in direction, that's where you have to make your decision. Do I want to close that higher time frame out until I see another continuation on the upside on the lower time frames? So inside here, I've maximized the profit I can now because it's starting to change direction on me. I'm going to catch that short, and I'm going to wait to get back in sync with my higher time frame long as soon as I see that reversal occurring on the lower time frames. So instead of it eating up your profits, take your profits, wait for the reverse to happen again to continue going higher. Because if it doesn't, you'll be glad that you took that profit on the lower time frames to offset the turn that was occurring in the higher time frames that you caught happening right here at the 1 minute. Because otherwise you're saying, I'm committed to staying here, even though I recognize that we're changing direction. And that's eating up profits when it doesn't have to. You could say, hey man, as soon as it breaks that low, I'm out. That profit I'm in there, I'm out here. I'm going to wait until I can capture that continuation there for the next reversal on the 1 minute. Does that make sense? Do you understand what I'm saying there? It's if you want to maximize your profits, then maximize on the fine tune it with the lower time frames. And always keep in mind that if your higher time frame is to go higher, just look for the next opportunity. It doesn't mean you've missed this. It just means that you just wait for the next reversal here and here to confirm that you're going back in the direction you were looking for. Because if that continues to roll over, you go, shit, I thought that was going to go higher. That broke through that level right here and then kept coming lower. Whew, good thing I took my profits here and I didn't sacrifice profits for the sake of something I'd hoped would be a continuation. Does that make sense? Hi, Ali. Good morning. I gave you some really good DAX this morning. You missed it, but that's okay. Wait for the Jazz technical analysis. Can't find the chat there. My pleasure. Okay, yes, thanks. We're promoting Hadi's channel now. Go, Hadi, go. He's out on his own now. Yes, thanks. Okay, good. This 15-minute chart isn't capturing my interest like it was in the FOC week or something. Like it was in the FOC. We should be heading towards the new week opening gap. See it get below here now and use this for support. We're already through our main threshold already. So this is a good example of what we talked about, Abs. So you see how that candle there, we came back, we want to see it tap it and go, and it didn't. So you say to yourself, all right, that's my line in the sand right there. I do not want to see it get back below there. So if you're long here and you see it starting to eat through that, you see my fail-safe's there. If it eats through my fail-safe, I'm out. So it popped through your fail-safe, I'm out right there. You take a loss from that high to that low. From there to there, that's your loss. And you go, if this goes back in the direction I want it to go to, then we have to start seeing our market structure shift, get back in sync with this above here. And then I can say, yeah, we're going higher, right? And if it doesn't, if it starts to eat through that whole candle and closes through it and then comes back to the mean threshold, you say, if I want to get back in sync with this, I'm on the wrong side of it. Well, I see it reversed right here and then took out market structure below us right here. We came back into it right here. So chances are we're saying, oops, we're starting to say it's aiming for my fail safe. So you can say our new fail safe is, I don't want to see this get broken. It does, we're heading for here. If that gets broken, it does, we're going lower. And now I'm like, we're probably going down lower now. So you moved your stop loss, you saved yourself your aggravation of your stop loss down here getting hit because your fail safe's here. So imagine our fail safe was sitting just below that breaker. And now we're going to wait and see if that gets hit. And we see that there's a structure change. There's a break below that mean threshold. And now we've got a continuation. And now we've just swept these lows. So now if we get a body close below here, we can expect that to come down even deeper still. And the next objective would be down here. Open below it, tap it, keep coming. Fill of the Bissy. Sorry, D. What's that? What are you sorry for? Nice tap. Continuation. Fair value gap, where that new week opening gap is done. Looking for the open range on Friday, which would be right here. That'd be the mean threshold of that breaker. That'll put you at 432. Regular trading hour gap, 434. Almost completely filled now. I took that short covered already with MES as I am an indice chicken. That's all right. Although it's bouncing off that Monday's first value presentation. You don't need to apologize to me, man. It's all good. There's the discount box. Just tap right off of it here that we're looking for. On the hourly, nicely done. I've given you guys lots of cool little entries today. Despite all this chop, I think the DAX, we gave you some real good entries. So we're back to that mean threshold. Look at that, hit it nicely. Now continue down. I want to see it take the lows now. We wanted to see the sticks come back. It didn't hit them. Watch for this to run down to the lows, come back, use the mean threshold, extend lower. So let's see if we can't push that lower. If that runs through this level, we're back to the sticks idea again. Otherwise, I want to see that hold now instead of pushing lower. Gold, we gave you the reversal in gold here this morning. Bitcoin, gave you the downside objectives in Bitcoin. And the sticks, we wanted to see it come down to the sticks or below the sticks. I want to see it come back into these and go lower. Didn't. And now we're back into this level right here. We'll see if that closes above here. And then uses this as support to come back into that range. Pull your fib tool from low to high, look for 50%. I think that'll be from here to here. 50% will put you right there. This would be a nice little box-to-box trade. If we get above here. There's another one in here. Right there. We're above this now. Let's try along here. Stop loss will go just below that low there. Take a partial there. Not. Why is that not turning up on my chart? Oh, I did take a partial there. It wouldn't let me take a one. How come that's not going in there? Okay. DAX has melted. What's your next downside objective, Darren? In DAX, I've got the low and these two downside objectives here at 880 and 850, somewhere around there. It's nearly taken previous lows. Yeah. Gotta keep in mind, I don't know why I can't get the partials out of here now. We're above 50%, so I'm paying a premium to want to go higher. So I'll wait for it to get to 70, and then I'll just move to 62. I'm just going to move to break even now. And it's probably going to make it up here and come back and tap me out anyway. But I've already paid a premium for it, so if I can get to 60, 72%, and we're already come back into this level here, so the potential is for it to roll over and come back down. Now that we're in the premium level, 62%, so that's why I'm like super tight. It's gonna, and I'll just chase this up. There's 70. We take a partial there at 75. And I can't because it's, for some stupid reason, it won't let me do that. So I'm just going to chase it. But it's the 79. Come on. Hit 79 and I'll go to 75 right away. I'm out. That's hitting these lows here. There's 79. Let's see if it gets to 88. There, it would have got me out right there. So now you just go, I don't care if it takes the rest of that. Now I just go, I want to see market structure shift here. So if you get a market structure shift and it comes back in here, find support in that, you can take your high at the mean threshold, put your stop loss below the low and let it run. XD. So you see what I did there is I paid a premium price for it. So you got to be real close with your stop because your potential is 62% reversal and come down. So you're paying that premium. So keep your stop loss tight and then chase it up. And if that reverses now and comes back down, you'll be like, good thing. Made like 500 bucks just on a small little run like that. But I want to know why I can't change my why I can't change that price action there. Can I do it on the other ones? Can't do it on there either. Yeah, I can here in oil, but I can't do it on those indices. So you see how that line in the sand got broken? We see it got broken early, and we're using that inversion to go lower, take out the lows. And so far, it's continuing to use each inversion level as support to continue pushing lower. So you're happy that your fail-safe is out now and you're not eating up your profits. to this 88. Back to that inversion level again. Inside the breaker's mean threshold. Take this whole range here. This whole sort of range, this whole body level to body level right there. And look where we hit. 50% of that snap. So if you're using wick to wick, 50% on the money. If you're using the bodies, just above perfect. If you like what we've been doing, hit the like, subscribe button, notify. We're here every day. We're here to help you out get better with your trades. And then you guys can all start your own channels like Hadi and Craig. You can start your own channel without ads. How's that? Then you can give your stuff away for free without ads. That'd make everybody happy then. Yeah. So if you're sticking around, by all means, pop a like in there. Appreciate it. And don't forget to check out Hadi's channel and help him out. Let's see Hadi get to 1 million people. I want to see you guys succeed. So yeah, let's get down there. Let's help each other out. Let's get them up there. I'll see you tomorrow, Hadi. You're very welcome, man. Change in direction. This one's better for the discount portion. See how the range is here to here? Much better entry into a discount to go long. Pay yourself at 60, 70%. Run up to 78%. Pay yourself. Comes back, takes you out. Wait now for this to get taken. That's an internal range liquidity hunt using the model take profit model 1. If you're using take profit model 2, which is box to box trading, this is box, and there's the only premium box you got is right here. So that's box to box done right there. Now you can wait for it to break market structure to get higher, or look for this box above you here. Premium box would be the last one, would be here. And you just hit it right there. So box to box done. That's trade take profit model 2. Now if you get above that on the close, wait for this bull trap to confirm that it's not a bull trap, and then use the inversion here from 930 to continue going higher. There's a nice bounce off of that discount box there. That's a really nice little run to discount, and then back into that weak opening gap again. Watch out for the bear trap though, because coming right back to that weekly or weekly, the week opening gap. Now it could just suddenly just turn around and start to come back down again now and leave you in a bull trap scenario. There's your breaker. The mean threshold of the breaker is holding price right now. So you want to see a body get above here. So internal range liquidity hunt, wait for range extension, confirmation of market structure shift, and then continue pushing for these next premium boxes above you, premium 1 and premium 2. Much clearer than the chop that was going on earlier this morning. Look at all that chop going on there. Same situation, watch out for the bull trap. You got to get above this breaker, use this breaker for support to go higher. Otherwise, wait. Excuse me. Nice displacement candle above this market structure shift. You want to see this mean threshold hold here right now, and I want to see that go higher from there. I'm going to take a long right there, and I want to see it. I don't want to see it get below here. That mean threshold of that candle, and leave the piece open. You want to have this as a breakaway. I want to see that piece stay open. If it starts to fill in this one and this last little guy right here, then my fail safe is right there. If I go below here, I'm out before my stop loss gets taken. So I want to see this hold price, this mean threshold here. The fact that I dipped right below it, I don't like that, but you know, ideally you could sit. I want my stop loss to sit right there, below that guy. So you don't want to see this fill in. So you put one tick below that level. Tick below, right there. And then I want to see it keep going higher. I want to see it break above this level. Look at this internal range liquidity. If you're doing an internal range liquidity hunt from just here to here, there's 50%, so you should be break even. Take a portion of your trade off right there. That's an internal range liquidity hunt on a small range like that. I want to see these two levels here get broken now, so otherwise it'll come back, take me up, no loss. I want to see acceleration through here now. You're in lunch hour, so they can get really sloppy in lunch hour, so protect yourself. Just make sure that your the logic is based off of here. I want to see now this candle here. I'm just below the mean threshold of this candle, so I don't even want to see that one get taken. Now I want to see that just continue to accelerate higher. Reach back into this candle's low, open, and mean threshold. So I'm between this one and this one right now. It's an internal range liquidity, and I've paid for the trade if it comes against me. So I'm demanding clean price action, and I'm demanding upside. And I don't want to see anything get below that level of precision I'm looking for. And I think I've shown you enough levels of perfect stops that I would expect to see a perfect stop there, unless the gap, the spread, takes me out there. But either way, that's what I want. Hit that premium level there. Discount box to box trading. Take profit model 1. Now if you start getting below here with a change in direction, we've already got this change in direction. We've got the reverse again, so we have a new change in direction. You're welcome, Craig. This guy's just sitting there, not doing a whole heck of a lot. Just double tapping the rejection block. So if you did get in here, pay yourself again there. 50% wick. So there's a couple of 3 little payment points there along with these down here. Because we're at lunch hour now, so I still would like to see it get back up into here potentially. If we get through that again on the close, look for this. If we get through that, then I'm looking for a bigger run through this level here. A potential run back into that breaker. Or the top half portion of that breaker. I have 15 more minutes and I'm out of here. If you guys want me to look at anything, let me know. See you later, Abs. Take care, man. Let me have a look at your little piggies here. How's the little pigs? Where's the little piggies? That's good. We're getting a bit more wick in here now. Let's just see that. I just want to see that keep going now. Okay. Puts me right on my money there. That next price leg lower nails that spot right there. Reach into our discount box, box to box. We're holding up on top of the box. Anybody want me to look at anything before I go? If you got a stock or something you want me to look at, let me know. Gary, if you're watching, what was those 2 stocks you told me about the other day? They wanted me to look at. See this bull trap potential? So we've got this change in direction. Then we change direction again. Now we're changing direction again. If we get a body close below here, wait for a structure shift. And then there's a little tiny imbalance right here. Come back, we just tapped it now. I want to see it keep coming lower from here. Go back into that range. Nobody else wants me to look at anything? All right, I'm out of here. I'll see you guys tomorrow. Thanks for tuning in. By all means, hit the like button, subscribe if you're into what we're doing. If not, thanks for popping in to say hi. I'll see you guys tomorrow. Bye.